Hello, everyone, and welcome to Seismic Capital's webinar on Venture Capital's 2021 performance and how you can join the party. I'm Ashley Willis of Fish Tank PR. We represent Seismic with its external media activities. I'm delighted to be here today with Eric White, the president of Seismic. He's also the head of Seismic's investment committee and the Seismic Board of Advisors. Welcome, Eric.
Hi, Ashley, and thanks very much for having me.
Yeah. So it sounds like you have a lot of hats to wear at Seismic. Tell us about how that works.
Well, I'm not really a hat person. Last time I had a hat was when I was playing baseball, semi-pro baseball in Washington, D.C. back a long time ago. But anyway, yes, I do a lot of things at Seismic, and actually everything works quite well. See, we get pitched on deals all the time through our vast networks, events, social media, directly from entrepreneurs, investment banks, the full gamut. I even get some things on LinkedIn, so things come my way. So we take an initial look, and then our diverse group of advisors and the rest of our senior management help screen the companies we're interested in investing in. We then do a deep dive on diligence and continued conversations with these entrepreneurs, and so much of our time is spent working with them. We also send it off to, again, our diligence team. And so my job, yes, is to keep the trains on the tracks or take them off the tracks if these companies just don't measure up.
So these companies, for our viewers who might not be familiar, what are you trying to achieve when you bring companies into Seismic?
That's a good question. Our main goal is actually our singular purpose at Seismic is to find companies early in the development cycle, then invest in them to create more value. Now, if we get our job right, we create these companies that go public, get sold for a lot more than what we invested in. Hey, some of them could come, create great cash flows and profits, and we can turn those as distributions to our shareholders potentially. These are wonderful scenarios that we're striving to achieve. I know we'll get around to this, but since it's the theme of our webinar today, this is what venture capital really is all about.
And so venture capital, for people watching, what is that?
Yeah, so in its simplest terms, it's capital and money that gets invested in ventures or early stage companies. Venture capital over the years has produced outsized returns for lots of investors, mostly institutions, pension funds, college endowments, ultra rich people, so-called accredited investors. Yes, those 1%ers. Before Seismic came along, investing in venture capital just wasn't generally available to anyone else. I wasn't going to turn this into an advertisement for Seismic right away, but our company has changed the dynamics of venture investing. Now it's available for most people on a minimum investment is just $1,000. I understand it as well. It's possible that accredited investors are going to need to be have a net worth of more than $10 million potentially. The SEC is looking at that. So here's an opportunity for anyone to invest in Seismic for just $1,000 or more if they'd like.
So you mentioned it's just $1,000. But why wouldn't someone just put that money perhaps in the stock market or in the bank? Isn't that better?
Well, let's look at some figures. Our latest webinar, Stephen Weinstein, my partner and our CEO, noted that venture capital is outperforming every other asset class, according to the most recent information available. Now that was for the first quarter of 2021, and the annualized rate of return was pegged at, 19.8%. Yep, 19.8%. That's amazing. And it was better than every other asset class that anyone could invest in. Better than the stock market, better than private equity, way better than real estate, and certainly better than a bank with their tiny returns, even under your mattress or in your piggy bank. Actually, you have a piggy bank?
I do not have a piggy bank currently.
Currently, but you used to have one, right?
Currently, I used to have one. I did.
Okay.
I have a sense there is more coming on this topic though, right, Eric?
Yeah, there is. It's understood that as well that in the second quarter, it was a 65% rate of return. Think about that. And that's in 2021. In other words, people, that special class that up to now really was only meant for super high net worth endowments, the 1%ers. And we know who they are. Invested in venture capital, seeing their money create a return of 65%. That's a reason to get your money out from under the bed and invest. Yes, crack open that piggy bank and soon we can accept cryptocurrency, as I understand it. This is pretty much why we founded Seismic, to take advantage of the markets and allow anyone to get involved. There are people that think that venture capital or VC investing is high risk, and it's been proven not to be true at all. It's not that high a risk, and we take a lot of risk out of it by the way we invest.
65%. That's a pretty big number for those investors and others involved in venture capital.
Indeed, it is true. And that's even, and that's after fees. And VC funds can be heavy-handed when it comes to charging their investors. At Seismic, we don't believe in that. We don't charge our investors to do the job for any type of fee at all. We all own the same equity they do. We set up things that we win only when our investors win. This is unprecedented in the industry.
So you're saying that you have the secret sauce then, so to speak, to create those outsized returns. Is that correct?
Well, unlike some secret or special sauces, no herbs and spices, and we tell you exactly what's in the recipe. So we hope so that we have something special. We've done things right that we think will give our companies a better shot at succeeding than typical venture-backed companies. Now, for example, we take care of all the administration so the companies can concentrate on building value. I mentioned our mentors before and our advisors, and they're part of the magic. But 65%, we'd love to get there. We'll just have to see. Even if it's only 10, 20, 30% of 65%, our investors would see a tremendous return. I think we'll beat that by a lot.
Okay. I feel like our viewers, though, might want to hear more than just hypotheticals. So what kinds of companies do you think can allow Seismic to achieve those kinds of returns? And do you have any specifics that you could share with us today?
I'd like to do that, but I don't want to spoil the news that will be coming along soon. But in general terms, for instance, we expect to announce a company that provides banking services to the unbanked population. Now, it turns out that having a bank account is a key component to wealth building. For many folks, making the jump from cash only to banking is nearly impossible, even in this day and age. That means you can't get credit, get a car loan, even buy or start a home. The company we're looking at changes the dynamics in that arena. We're talking about right now, 59% of the people who make them $50,000 a year really can't open a bank account. That's a lot of people. And we can make a big difference there with this particular company.
That sounds like a really interesting company, but I wonder, how does that turn into investment gains then for your investors?
Well, I don't think we've mentioned what unicorns today, but it's an industry term for those newbie companies that achieve billion-dollar valuation. Now, the company, and I think there's a emoji on your phone that's a unicorn. So we like to put those on our phones as well. The company we're considering isn't worth anywhere close to $1 billion today. But once they get some investment from us and it builds market share through demonstrating what it can do, it'll get a lot more valuable. Eventually, our plan is to take it public or sell to a financial services company. At that point, we expect we'll have funds to distribute to our investors, making a big difference to a lot of people, often correlates with high valuations. Now, about 40% of African Americans and 30% of Latinos are unbanked or underbanked, according to the Federal Reserve. And the founder of those companies happens to be African American. There's a lot of people who can use our services and demonstrate to the markets how valuable the service can be. One other metric that's worth noting, half of the people who stop their education before the end of high school are unbanked or underbanked. Think about that. This fintech company really can make a difference for so many, and was founded by this terrific guy. And as I mentioned, you may have seen him on Shark Tank, and he got a thumbs up from a potential investment by one of the most famous panelists who happens to own an NBA basketball team.
Oh, wow, that's so exciting. And it sounds like a good investment. I wonder, do you have others in mind then?
Well, not just in mind. We have contracts being negotiated right now by our crack legal team with several others. I want to make sure we are not creating any confusion here. Invested in Seismic get the benefit of all investments we make. People, again, talk about risk and venture capital. Yes, I mentioned the recent great returns. But with Seismic and our slate of different type of companies, be it fintech as mentioned, gaming, medtech, process improvement, e-commerce, and other, really can take risk out of investments for us by putting together this slate. People talk about VC being risky, but if you look at the statistics and how we're doing it, I don't see that at all. Ashley, there are many other companies in our space that allow folks to invest in, say, 1, 2, or 3 companies directly, and those companies take a fee for doing so. That, to me, can be risky. With us, you invest in a team of professionals, as I mentioned, that have been there, done that. And we invest in, again, a true slate. We believe that takes risk off the table. Now, in our offering documents with the FEC, we have 14 companies we listed as potential investments. And believe me, there are many more, and this process will be repeated over this year and further on, over and over again. Not saying we'll close all of them, but you get my drift.
Definitely. And I appreciate that background. But getting back to some of these other companies.
Right. Yeah. Well, let's talk about latency. Now, that's the lag that happens between when you push send on your computer and when the system at the other end receives the command that you just initiated. Now, latency is a big deal, in particular regarding, for example, financial systems. Maybe you've heard of these nano traders that put stripped down computers to run trading programs as they close the stock exchange, get close to the stock exchange computers. You may have seen these crazy streams. The closer you get, the more advantage these programs get. That advantage translates into billions of dollars in some cases. Now, we're not getting into that market at all. I'm just using an example to set the stage of this company I'm discussing. Where do we feel, we have a good players in gaming. Gaming is a booming industry. If people around the world are playing a video game, it's important that no one has an advantage based on distance from a central computer. The company we like basically makes infrastructure changes in the truly up-to-date, super fast 5G systems. Everyone's heard about that, to create level playing field anywhere in the network. No one experiences latency, and no one gets a competitive advantage based on distance to these home computers. Now, to put some numbers on it, by 2025, we're talking about 2.5 billion gamers out there playing these games. We're talking about a revenue of $255 billion worth of revenue of the industry overall. We expect that a company that creates a better experience for gamers across gaming companies will be very valuable. Saying this, the company is run by one of the most experienced pros in the space running technology for one of those big brands in Asia. He's a terrific leader, visionary. I speak with him all the time, and he has tremendous technical skills as well.
This is a lot of fun to hear about these different categories and businesses. Tell me more. Anything else going on?
Sure. I want to remind people about how investing in these great companies can affect their lives. Now, investing in Seismic, they get a piece of the action on all the companies we invest in, not just the one. And if any one of these takes off, we hope to return capital to people who invested in Seismic. And as we create inflection points with other companies, will return money even greater. Another company we like is in the women's health arena. Now, women who've had babies need healthcare, right? A lot of time, all the focus goes into baby care, and the moms, they don't get the attention they need. Now, there's going to be 3.6 million babies born this year in the United States, and that's just the US. That's a lot of moms. The company we like provides an app, services to ensure the moms are getting their healthcare too. Beyond taking care of the moms, will lower the cost of care for the healthcare companies by hopefully avoiding catastrophes from overlooked symptoms. This is run by a tremendous female doctor who has great experience, great leadership, and happens to be a mom as well. And I talk about her kids at all with her. We have conversations with these CEOs that are personal, and we get to know them really well, and we develop a level of trust. And that's something that I think makes us special as well.
Definitely. That's great to hear. And now, we've talked about fintech, we've talked about gaming and health tech. Are there more?
Well, yeah, so this is my job, right? So since we started Seismic, we've looked at around 200 prospective investments, and they're coming in every day. Maybe after next week, there'll be 260. There are more, again, every day. Investors in Seismic get the benefit of the screening we do. I want to say something about our process. First, we decide the companies we like. Then we put them through deep due diligence that I mentioned earlier. Now, we have analysts who look at industry, companies, competitive environment, technology, patents, legal, and other key personnel. If a company gets through all of that, and through our board of directors and through our investment committee and our crack team of lawyers, and we can come to terms, then we'll make an investment. We're very serious about protecting our investors' money. We really do a deep dive. It's important. So we want to take care of your money that you invest in us. Now, we know that early stage companies fail for a lot of reasons, but there are two very big ones, and I mentioned them earlier. First is the lack of capital. Now, we solve that by being the investor. That's obvious. Second is that the business of running a company often gets in the way of growing a company. Now, we solve that by taking on the administrative role, as mentioned, so entrepreneurs can focus on growth. We think that's a tremendous formula. It's not seen by others in the industry.
Definitely. And you've talked about establishing that process and that infrastructure to ensure success for these startups. And from the leadership team to the advisory board, it's really impressive. What else do you need?
Well, just candidly, we need more investors. As again, we can't make all the investments you want until we're able to support them. I mentioned before that traditional venture funds have been limited to pension funds, institutional investors, college endowments, rich people. Yep, that 1%ers. Yep. We have changed the dynamics on that by making it possible to people to participate with a minimum investment of just $1,000, as I mentioned. You can do it by credit card, and many different ways to invest with us. I think if we'd gone the traditional round, we'd have our $50 million in the bank by now, as there are plenty of old school investors that we know who like us. And I've been in the business a long time. I know a lot of these folks, but that's not what we wanted to do. We wanted to open the door to normal folk. Not now that we've done that, we need more normal folks to come in and to be investors in Seismic.
Wonderful. We've talked so much about these potential companies and the processes that you've put in place. I do see we're starting to run out of some time, but Eric, should we take some questions now?
Sure, bring it on.
Okay, great. All right, let me pull this up. Here's a question that was posted to the chat. Eric, what's your background and the background of the team that makes you think you can pull this off?
Well, about myself, I've done a lot of things over my career. I was a child actor on Broadway and a singer and things like that as a kid growing up in New York. I've been a political advisor, government relations professional, working on technology, gaming, and telecommunications. Over the past decades, I founded a company in the internet boom that was a good investment that grew tremendously with only $1 million of investment. And we did quite well with that. Think about that. I've been an investment banker and raised billions of dollars for companies along the way. I have a good sense of what works and what doesn't. I apply that every day to my work with Seismic. Now, Seismic isn't all about me, though, that's for sure. We have a wonderful team led by my partner, Steven Weinstein, who was our CEO. Like me, Steven also ran companies, raised lots of capital. Long time ago, he was IT manager of Reuters, and he worked on lots of industry firsts, such as artificial intelligence and financial services and in news reporting, real-time data through Windows, hypertext linking of stories, pictures, and data. These all seem kind of normal to us now, but they weren't then. Our financial arm is run by Alice Newhouser, our CFO. You might see Alice in the future webinar. She's extremely experienced. She's been the CEO of motion picture studios and built production facilities, and also raised lots of money along the way. Our legal team is led by Jan Garin, who has worked on restructuring, fixing companies, countless companies worldwide. It is gratifying every single day to come to work with these terrific people and to see what we've achieved already. We get along tremendously well. There's a great team camaraderie between us, with us and our advisors. And that's something very special.
Definitely. And I always love when you all speak about your backgrounds and experiences, because it is so impressive to hear everything you've all accomplished. I have another question for you, Eric. You noted that venture capital had achieved a 65% annualized return in the second quarter of 2021. Where did that number come from?
Well, I did say 65%, but I actually meant surpassing 65%. And thanks for giving me a chance to update that. It's a service called Pitchbook. It's a huge database, tracks these statistics. We can put a link in the chat for this information, what Pitchbook said, the 65%.
Great.
Yeah.
And then one last question. I think this is the one you were looking for, definitely. I'd like to invest. How do I do that? Wow,
that's great timing. And thanks very much, Ashley, for letting me go back into this. So please go to invest.seismic.company and sign up. That's invest.seismic.company with the word company all spelled out. That's C-O-M-P-A-N-Y, not .com. So thanks for that question.
Well, that is all the time we have for today. If people want to post additional questions, we will leave the chat box open for about another 15 minutes or so, and the team here will answer the questions on the website when we post this video of the webinar to the site. Thank you so much, Eric, and to our audience for tuning in. Again, I'm Ashley Willis from Fish Tank PR, and hope everyone has a great day.
Thanks very much, Ashley, and I'm glad I was speaking with everyone.